We'll give it another 15 minutes and then we're going to start, guys. Can you guys see the screen? Okay, the topic of the webinar is this. I'm not going to commence. I'll give it another 10 minutes. It's pretty simple. It is what is support and resistance and how to spot entries using support and resistance within the market. But that is the topic of this webinar. We'll give it another 10 minutes and then we'll commence. Can you guys see the screens? I think I've got some issues with it. Apparently, it just goes blank. But I could see, I think you guys could see it now. Alexander said yes. James, yes. Okay, that's fine. Well, let's give another 5 minutes and we commence. I'm going to be fast on this because I'm going to discuss first a brief introduction to support and resistance. I'm sure all of you knew already because you guys have been trading for a long time. And then I'm going to show you the way I see and approach support and resistance, which is a little different than how you guys see it. And then I'm going to show you guys on Euro US dollar how I would spot entries and exits out of the market, exactly how I would trade on Euro US dollar, which I'm sure would give you confidence. And I'll hope that you guys enjoy this. It's 8:56 in London. Yeah, I try to give a webinar once like every 2 weeks, every after 2 weeks. Um, it's just difficult for me to take out time, but again, I'll try it so that you guys get to take benefit from it. Miguel, I can't, for some reason, I can't mute you. It's just weird. Uh, I just leave it there. No, could you bring a tea for me? Okay, great. D. Morning, good. It's 9 p.m. in London. Sorry, who's this? Hello. Hi, Monica. Hi. Listen, I'm in a webinar right now. I'm finishing in next 1 hour and 15 minutes. And after 1 hour 15 minutes, I'll give you the address and everything. Yeah, yeah. I'm really sorry. I was really busy actually. Just give me a ring after now. Yeah. 15 minutes. Yeah. All right, love. Bye. Uh, it's on the okay. Okay, daily high and low is pretty much like the high or the low of the previous day. You don't need an indicator for it. Obviously, there is an indicator. I think I loaded that indicator on FIP, but normally you don't need an indicator for it. It's just you just mark the previous day. It's pretty much like this. That's it. It's pretty much like this. That's the previous day. So it's so easy that the next day, if the price breaks the high of the previous day, then it is going to be a bullish day. And if it doesn't, and if it go and test the high of the previous day and it rejects from there, then obviously the aim is the price will go towards the support and the low of the previous day, and that's how it is. You can use daily high and low to plan your intraday trading. That is one of these strategies. Apparently, a lot of companies are selling that intraday trading using daily high and low. If you heard of it, it does matter because if if you have a if the market opens and break the high of the previous day, then this day would be considered to be a bullish. And if it does break the low of the previous day, then that's going to be a bearish. And that's pretty much the concept of the daily high and low. It's pretty much like using pivots. If the price opens above pivots, expect it to be a bullish day, and if it opens below pivot, then you'll be expecting it to be a bearish day, and that's sort of That's all you need to take out of it, because remember, at the end of the day, it's not the daily high and low that makes you a trader. It is the understanding of the price action that makes you a successful trader. It is not Fibonacci, it is not pivots, it is not supply and demand, support and resistance what makes you a trader. These are just stations, like levels in the market, nothing else. What makes you a profitable trader is your understanding of the price action, your understanding how the price action reacts on these levels, which we call them pivots, we call them Fibonacci's, which we call them support and resistance. So I think there's more concentration and there's more focus towards let's say on Fibonacci, on pivots and daily high and low, and then there is an ignorance, and we end up rejecting the significant importance of the price action. That's what I see, and that results eventually into losses. But that's how I have observed you guys. And normally, even the friends who are trading with me, I've seen that they are more focusing on Fibonacci, support and resistance, supply and demand. Instead, they are not focusing on the price action. Without understanding of the price action, these levels are less like stations where they would eventually stop or continue. So that's and the daily high or lower. That's how you should approach it. Nothing more. Do you guys hear what I said, and you guys understand what I said? Just write something in the box to acknowledge that, please. Okay, that's great. Okay, guys, in 2 minutes we are going to start the webinar. It is going to be the repetition of what I taught you guys earlier in the previous webinar, but then again I'm going to experiment in front of you the entries and exits, how I will take using the concepts of support and resistance. And I think that exercise would give you a lot of boost and confidence. My approach towards support and resistance is slightly different. I'm going to show you guys how I understand the support and resistance, and that how I believe in it. And I'm sure you guys already knew all of this, but then again, if you see what I see, then I think you'll end up being a profitable trader, because I've been a profitable trader for 3.5 years now. Make sense, guys?
Yeah.
Okay, now who's this?
Yep.
Jess. I had to mute. Okay. If you guys have any questions, you just write in the box, but I will take your questions for 15 to 20 minutes once I finish the webinar. I'll try to keep it precise. So I'm going to discuss support and resistance, the application of support and resistance, and my understanding of support and resistance for at least 20, 25 to 30 minutes. And then I'm going to show you exercise using support and resistance, entering and exit out of the market on Euro US dollar, which is one of the most traded pair in the industry, for let's say 20, 25 minutes. And I'll take your questions after this. Let's keep it precise and short. Okay, guys. Okay, let's begin, guys. Can you all hear my voice and see the screen right now, guys? Acknowledge it, please.
Yeah.
Okay, guys. Uh, Okay, let's begin. Support and resistance, guys. I'm sure you guys, all of you knew about support and resistance. Support is a ceiling and resistance is a floor. A support is a floor, a ceiling, a resistance is the top on your head, and that is how I see it. I'm going to show you how to mark an understanding of support and resistance, how I approach the support and resistance in the market. Now, you guys have marked support and resistance on your charts many times. Quinn's video, Ryan videos, Rico's videos are amazing. Exactly the way you should mark them. There is no other way. You mark them on the wicks, you mark them where the market is testing a certain level. How I see it is slightly different, but at the end of the day, the concept remains pretty much the same, and that's how I see it. Again, it is significantly important you understand if you have 7, 8, or 10 lines on your charts, for instance, you have like 6, 7 lines on your charts. You need to know which is the strongest support and resistance levels, which are the weakest support and resistance levels. That's very important. Now, there's a misunderstanding when you guys say that support and resistance marked on a daily time frame is stronger than the one which is marked on a 5 minutes time frame. That's normally the perception. But remember, guys, if I marked a line on a daily time frame, the line would stay at the same place even if I zoom in into 5 time frames. The only difference is on a daily time frame, I'm zoomed out of the charts, and on 5 minutes, I'm literally zoomed in. So there isn't any difference. Once the line is marked on your charts, the level remains the same regardless of which time frame you're on. Do you guys understand what I just said? Acknowledge it, guys.
Yeah.
Good. So misunderstanding, guys.
Yes.
Remember, this is not a criteria to decide if this is a strong levels of support and resistance, which by marking on the daily or weekly time frame and zooming in into 5 minutes, and you say like on the lines you mark on 5 minutes are weak, instead the lines you've marked on the daily and weekly time frames are stronger, but that's not the case. Remember, if you mark a line on a daily time frame, it remains the same even if you zoomed in into 1 minute time frame. So levels never changes, right? The line would not never changes. So that understanding, that concept is wrong. Now I'm going to explain you which is how I approach support and resistance, and which is this. I categorize them into two levels: strongest and then second to strong. Like criteria one, the strongest ones, and then the second is like weak. It's not that strong, but then again, it is the level. That's how I distinguish into the markets. I'm going to show you guys. Okay, guys, you can write it down. The first is point of reaction in the market by the participants. So the point of reaction is the strongest levels of support and resistance, guys. Need to understand point of reaction in the market by the market participants. Who are the market participants? Are buyers and sellers. I'm going to show you. I'm going to show you in a minute. Guys, this is a point of reaction. Can you see a reaction to the downside? 417 pips here. The price reacted from this level. Market participant entered and reacted from this level, guys. See, the price went 420 pips down to the downside. Make sense? Do you guys understand what I just said? This is called point of reaction. I'm going to show you more. Reaction to the upside, guys. Can you see this? 318 pips. See this, guys, to the downside. It doesn't matter if you are not precisely right there. 15-20 pips difference doesn't make sense. Understand the concept, guys. That's important. Point of reaction to the upside, guys. Reaction to the downside. Look at this. Look at this. Reaction to the downside, guys. 905 pips. Point of reaction to the downside. That is a reaction to the upside, all of it. To the downside. To the upside, guys. No, listen to me, James, first. Let me finish this first, then you can ask me a question. I will discuss the wicks in a minute. I'm explaining the support and resistance. The first and the strongest is the one at the point of reaction. Point of reaction are the levels in the market where because of market participant, the price reacts. Try to understand this. Reacts. I'm not discussing wicks here. I'm discussing the point of reaction, the reaction levels. See, the levels I've marked on the charts. Market reacted to the downside, 400 pips. To the downside, 395. Understand, guys, I'm not looking at wicks and candles. I'm saying a level from where the market reacted. That is significantly important, guys. Do you understand what I said? Point of reaction. Do you understand this, right? Say something. Good. Let's mark them. I'm not marking the wicks here. If you see, I'm not marking the wicks. I'm just marking the point of reaction. That is it. To the upside. To the downside. So do you guys understand the strongest support and resistance, manual support and resistance, is the ones which is on the point of reaction. Of what is point of reaction is where the participant had reacted within the market. Understood, guys? Any questions in relation to the point of reaction, you can ask me. Guys, any questions you want to ask me about point of reaction? Okay, how are they precise? Good question. I'm not discussing here how to mark them on your charts precisely, but I'm trying to explain you the concept of support and resistance in this webinar and how to utilize it for the purposes of entries. Again, I said, listen, I said again, it doesn't matter if you're not on the precise point. If you're not on the precise point, let's say if the market is touching on the 2 points, I'll leave the line where I can connect both points together, let's say. So both points together. If the market has 1 point, it doesn't matter, I'll connect just 1 point. Make sense? So try to connect the most of the point on that precise area, and that's how you do it. It doesn't matter if it's exact or it isn't exact. Remember, it could be a point of reaction again. Promise it could be a point of reaction, but again, remember the point of reaction is you need to see the reaction from that level. Let me give you an example here. This level, the price was consolidating, right? But then this is also a point of reaction. What happened? The price went to the downside, 209 pips. It isn't the strongest one, but still it is to the downside. Makes sense? Area of consolidation could be a point of reaction. Let me give you an example. This is an area of consolidation, guys. And price reacted from here to the upside. So yes, this is a point of reaction. The reason is the price reacted after this consolidation. So normally, price of reaction will be areas of consolidation at times. Understood?
Yeah.
Okay, good. You can rewatch the video again and understand the concept. I don't want to spend too much time on this, guys. Okay, the second point of reaction is the strongest one. Now the second, after the point of reaction, is the areas of failure within the market. Areas of failure within the market, guys, are the second in line. Areas of failure within the market. What does it mean? What does it mean? It means the market has tried to reach a certain area and the market participant had failed from that level, resulting in a wick, resulting in a pin bar. A price has gone, the participant had pushed the price to a certain level, but they had failed. They had failed, in resulting in a wick or a pin bar. Do you understand what is the point of failure, the area of failure or point of failure? Do you understand that, guys? Well, let me give you an example. Buyers pushed the price up. At a stage, price was here, but the sellers pushed the price down. The buyers pushed the price up. At a stage, the seller came into the market, pushed the price down. And that area, that wick represent a point of failure of one of the market participant. It could be a buyer, it could be a seller. So you would mark a level at the wick, which is a point of failure of the market participant. Understood? Do you guys understand the concept? What is point of failure? That is right. Point of failure is a wick. A market participant had failed at the certain level, and that level means level of failure, point of failure. Yes, that is it. Simple. Quinn discussed this. Quinn said, mark your wicks. Ryan said, mark your wicks. Exactly. What is the reason? Market participant had failed. Now the question is this: why do we mark a point of reaction, and why do we mark an area of failures within the market? Let me mark them first on my charts, guys. Wick, exactly, precisely, wick. If there are different levels, I'm going to mark a level where I can connect most of the wicks together. Wicks. Do you guys understand what is the point of failure? It is a level of failure of the market participant within the market. Could be a buyer, could be a seller. Do you guys understand? Good. Now I'm going to explain you the reasoning behind a point of reaction. Why do we mark point of reaction within the market and areas of failures within the market? Why do we say okay, I'll do that in a bit, promise. Why do we say, now understand this, listen, very important, significant. Why do we say the point of reaction and areas of failure are significant within the market? The first one, point of reactions are the area, market is moved by hedge funds. The market is moved by the world's biggest 6 banks first, then to some extent by the biggest hedge funds, and then to a certain percentage it is moved by the retail traders. I'm sure you guys knew about it, right? So the point of reaction is the significant level of reaction where the market had reacted, where the market participant entered into the market and moved the market either side. Now that movement, that area of reaction means an entrance by the biggest banks. So those levels represent that activities carried out by the biggest banks in the market. Now let me say this: a market reacted from this point down 900 pips, guys. This is not the retail trader who moved this market or the hedge funds. I'm sure significantly it is the institutions, the banks, the biggest banks who had came into the market and start sell off here. That's the reason the market fell to the downside. So we are marking those levels where institutions are entering and exiting. Do you understand what it means? The point of reaction. It's an institutional level that you need to see. If you see what they are seeing on their charts, then you're likely to be trading with them. If you're trading with them, you will end up being in profit. Make sense? Do you guys understand this? Now, very briefly, why do we mark point of failures within the market? Wicks. The question is where wicks. Okay, I knew exactly how to mark the wicks as support and resistance, but the question lies, why do we mark them? There must be an explanation. Yes, I'm sure you guys heard of this. Market is made up of human behavior. It is moved by the human beings, right? And the market movement represents the human behavior. You heard of this.
I've heard of this many times, different webinars, websites, charts online. Now, remember, market participant tried to reach a certain area, let's say a buyers or a sellers, and they had failed. Now, it is the human nature that once we fail, we always try to go back to that area again. It's pretty much like I competing a race. I lost the race. I will always try to go into the race again and aim to win it again. Makes sense? So we mark those levels of failures because the market is moved by the human beings. So the human nature is this, that they once they fail, they always reattempt. They always reattempt. So remember, mark those areas of failures and wait for the market to retest and retry. Let's say, let me give you an example here. Buyers fails at this area. Buyers pull the market up. Sellers push the market to the downside. Buyers failed at this area, right? But understand, buyers will always try to aim for this area, to break this area, to make it up for the failure they had, and they had tried here again and they failed. Does it make sense? Why do we mark the point of failures within the market, the wicks? Do you understand this, guys? Good. It's the first time you guys may be listening to these concepts, but then again, go to my webinar videos again. You will understand. If not, you can send me your questions. But remember, it is not enough as a trader. If you want to be a trader, if you want to make this as your profession, right? It's not enough that you just knew marking support and resistance on your chart. If somebody questions you, why do you marking support and resistance? What is the point of reaction? You need to know exactly why you're marking that line on your chart. If you do not know the reasoning behind it, then I'm sure you are not completely in knowledge of that equation, which is not enough, which isn't enough. This is significantly important, guys. If I mark something on the charts and I'm not sure, I just say, okay, because I saw a video that they say that is how you should mark support and resistance. That's not enough. That's not enough. You understand what I'm saying? That's not enough. That's not a reasonable justification. I'm not prepared. Very nice. Very good. Give me a minute, guys. Okay, got a phone call actually. Okay, guys. Next. Quickly moving on to the next. Now this is a support and resistance level in the sideways market. Market has three directions: sideways, no trend, uptrend, downtrend. I'm going to go quick on this. So marking straight lines represent a sideways market. So I've taught you already how to mark them on your charts, right? But then again, this is important. You heard of trend lines. You hear of tunnels. They're not trend lines and tunnels, guys. These are support and resistance. Don't confuse yourself. You see tunnels. You see this. You guys see this, right? This is not support. This is not tunnels. Don't confuse yourself. These are not tunnels. These are not channels. These, you can say them because they look like channel and tunnels. But at the end of the day, they are support and resistance, guys, in an uptrend market. In an uptrend market, do you understand? Guys, look at this. This is support and resistance in a downtrend market. Do you understand this? Yes, they look like tunnels, they look like channels, but don't confuse yourself. Got it, good. So I'm going to show you guys in a minute how to mark. I've taught you already. Again, I said channels, support and resistance in an uptrend market, descending market, or in a sideways market. You can mark them at any time frame. Remember, why do we not mark them on a 5 minutes time frame? The problem is this: we are too zoomed in. We cannot see the bigger picture. Let's zoom out. When you zoom out, you can mark them effectively, looking at the whole picture. Zoom in and zoom out is called movement within the time frames, and that is it. It doesn't matter what time frame you mark them. At the end of the day, the levels never changes. It always remains at the same place. They are channels. They look like channels, but they don't confuse yourself, Steve. are emphasizing they look like channels, they look like tunnels, and that's why they are also known as channels and tunnels. But remember, most importantly, they are support and resistance. They look like channels. That's hence we say they are channels. The price is moving within a channel. But remember, in reality, the price is moving not within a channel. The price is moving within support and resistance levels. That's important to remember in your mind. We emphasize more on what? On channels, on trend lines, on tunnels, and forget these are support and resistance. Makes sense, guys, what I'm saying? I'm going to show you in a minute, but remember, this is support and resistance in a sideways market, which we just learned how to mark them on our charts. I explained you already. This is support and resistance in an uptrend market, and this is support and resistance in a downtrend market, guys. Nothing else. And remember this, very important. They look like tunnels, they look like channels, right? And that's hence we say them channels and tunnels. But remember, they are originally who they are support and resistance. Are we clear on this? Are we clear on this, guys? Good. I'm going to show you how to mark support and resistance on a rising channel, rising trend, on an uptrend or a downtrend. I'm going to show you, I will already show you how to mark them on a flat, no trend, support and resistance. I'll just show you level of reaction, level of failures, done. Now this, understand this, significantly important. How a lot of people are asking me, yes, trend lines are support and resistance. This is the point I'm trying to make. What are they? They look like channels and tunnels, and that's why we say, what is trend line? This line is a support and resistance. Why do you call it a trend line? A rise. You don't call this a trend line, but you call them a trend lines, right? The reason is because there is no trend on this. This is a sideways market. Support and resistance in a sideways market is this. You understand, guys? But why we call them trend lines? A line with the trend, because rising trend, rising market is a trendy market, falling market is a trendy market, and hence we say trend lines. Hence we say look like tunnels, channels, different terminologies in different websites. Babypips.com, it's talked about in different chapters. Understood? Now I'm going to teach you how to mark support and resistance. Support and resistance. Understand, guys, support and resistance in a rising market or in a falling, ascending and descending market. Are we clear so far? Acknowledge it, guys. I cannot go further if I don't know if you guys are with me on this. That's better. A lot of people are asking me a question. Everybody knew about marking support and resistance in a no trending market, a straight lines, very easy. Wicks, levels of consolidation, blah, blah, blah. But then again, a lot of people are asking me, how do I draw my channels? Remember, guys, I'm going to show you the concept now. You understand the concept? You earned it. Now I'm going to show you the concept, guys. Understand this. This is your support and that's your resistance. Understand this, that I'm going to show you the application on the charts, guys. Significantly important. Then you understand how to mark support and resistance on your charts. This is support and resistance. What happens? I discussed this before. The price rises from support, go to the resistance, come back to from resistance to the support. The price always moves within support and resistance. This is a price behavior. It's pretty much like a fish within the water. So price is on the support, it'll aim for resistance. Once it's at resistance, it aim for support again. You understand, guys? Simple concept. Everybody knew about it. Yes? Say yes. Good. When it breaks the resistance, this becomes support and price find another resistance. Remember, why the price find another resistance? The reason is this, because price moves within support and resistance like a fish in the water. Understood, guys? Simple concept. You know this, right? All of you know this. Simple, right? Good. I'm going to show you the same concept in a rising market or in a falling market, guys. Then I'll explain you how to mark support and resistance on your chart, guys. I think we have a problem because I've just received a message which says the maximum level of participant in this conference will be 50. So I think anybody trying after 50 is not allowed, and that's what's happening. But anyways, we have a recording of it, so I'll post the recording for the guys who were unable to join us. Austin, you're lucky guy. Okay, guys, support. This is support and resistance in a rising market, ascending market, right? Yeah, absolutely. You need to. I'll discuss a couple of things once I finish this. Very interesting, knowledgeable things, guys. I learned this by the hard way. It's easier for you guys to learn in an easy way. Anyways, focus on this, guys. We don't have time. This is support and resistance in the rising market. Price rises from support at resistance, fall back to the support again. Rises from support to the resistance. Right, guys? Isn't it? Is it like this? And then what happens? The price breaks the support, right? This becomes resistance. Price find another support level. It might take 15, 20, 30 minutes before the price will find a support, guys. Price is like a fish within the water. It can't resist and live without a water. Resistance prices cannot live literally without support and resistance. So it breaks a resistance support. It becomes a resistance. It becomes a resistance. Price find another support. Understood? Do you understand, guys? Good. Now I'm going to show you guys how to mark support and resistance on your charts. Remember, I'm not focusing to establish a channel on my charts. I'm not focusing to locate a channel on my charts. All I am trying to do is to mark support and resistance. Now, what I said price moves within support and resistance. So you need to establish if where the price is first, A, then second, where is the resistance of that price and where is the support of that price. So you need to establish this. Let me show you here. Write it down. Establish where is the price. That is one. Identify support. It will be somewhere near the price because price always moves within support and resistance, right? And identify, guys, resistance. You understand, guys? Three things. Where is the price? You'll see on your chart, simple as. Let's say where the price is. This is the price, guys. But remember, we need to establish this price is moving within support and resistance. There will be a floor and the ceiling, and price will be in between. Remember. So if this is the price, guys, if it falls to the downside, that is where it will go, right, guys? So that floor has to be to the downside somewhere, yes? And if it rises from here, it will go eventually to the upside, right, guys? Around somewhere. So we establish where the price is. Now, first of all, I want to establish the highest point above the price has gone. The highest point where the price has gone is the resistance. How you mark resistance? By marking just the highest point. That is it. That is the resistance. That is it. Leave it if I'm not connecting the dots here. Leave it, I'm not connecting the lines. Doesn't matter. What matters is this, guys. Understand the concept of marking a line, a resistance line. It is the highest point. It is the ceiling. Price has never breached this yet. You understand? The price is under the ceiling. You have to establish the ceiling on your chart. Establish the resistance near the price. Have you guys understood what I'm saying? Do you guys understand? Now let's establish the floor. This is where the price is, and that's the low of the price. The floor has to be around there, because it's a price is falling. There will be two directions. There will be only two directions. Either it will be like this, rising, ascending price, or falling price will be like this, simple. Do not focus on establishing channels. That's what I'm not suggesting. What I'm suggesting is mark the price, then establish the highest and the low point. The price, capture the price within support and resistance. What is the resistance? The highest point where the price, the level where the price has never breached yet. And the low, this is the low, guys. This is the low normally, guys. Originally, this is the low, because price has gone until this level, right? Understood? But normally what I like to do is I connect them to 2-3 points. So I'm going to leave it here. I'm connecting 2 points here, guys. I like it. But again, it does not mean, remember, after this is the level where the price has gone. So this is the floor. The ultimate floor is this, not this. You understand? Do you understand, guys? So I have marked the highest and the low point where the price has gone within the market. That is it. Resistance and support. Automatically it will create something, either a channel, ascending channel, or a descending channel. Automatically it will establish. Look what happened. A descending channel. Now see this. Read the price on your chart. This is where the price is. It can go to the upside, so you already have the cover. You already have the level marked. But to the downside, it has to travel to this level, right? Let's see if we can establish a floor for this. It's very simple, guys. Ali, can you understand what I'm saying? Guys, are you understanding? Are you with me on this? Okay, guys. Ali, do you understand what I'm saying? Guys, you already knew these concepts. Already, you master on this. I'm just repeating it, nothing else. Good. So remember, I marked the floor. I marked the floor of this price. Remember, price was rising to the upside. Capture the price, I said. Price is rising. So I marked the floor, and I said I marked the high of it. This is normally the high. But remember, this marking is insignificant because this is the past now. Because this is the past, it is irrelevant or relevant. It is the question for you to decide. Let's say I say it's irrelevant, so I leave it here, guys. It is relevant until the price remains within this. Until price remains within this. But once the price breaks this, resistance and support, price breaks this, then this is irrelevant. Because price cannot never go back into the history. You understand? So what can happen, guys? Prices at the support can go check the resistance, then the support, then the resistance. You understand, guys? But then again, if the price breaks this, price retest, I'll explain that in a minute, but I'm trying to say the price breaks this, then price will go to the downside to check the next support level. So you need to capture the price within support and resistance levels around it. Simple. Or when you do this in a rising or a falling market, automatically it establishes channels. Do you understand what I'm saying? It needs a bit of practice, guys. It needs a bit of practice. I'm going to show you again. Let me show you guys again. It's easy. I'm going to show you again in a minute. Price was rising. Let's say price was here. Price was rising. Let's say we didn't have this. We did not have this, guys. Let's say price was rising only up till before. What I will do? Low point, high point. That is it. I'll try to capture the price. That is it. Only a reference. It doesn't have to be exact. Only a reference, guys. I know the price has never gone beyond this and never gone beyond this until it breaches. Makes sense, guys? Does it make sense? Good. Now follow me on this. Now you'll understand more. follow me. It's not easy. It's not easy what I'm saying, but I can't spend more time on this. I need to show you entries and exits out of the market. But this was significant. This is how I approach the market. You need to understand the concept on this, guys. Let's say this was support and resistance. Price was rising like this. Very important what I'm suggesting now. This will immaculately improve your skills in trading massively. The price breaches. The price breaches. So you need to establish the price, break the support, and support become a resistance now. This becomes a resistance. This becomes a resistance. Now you need to establish another support, guys. Let's see this. This is another support. Does it make sense to you guys? Why I marked the second line? Does it make sense? Simple. I'm establishing another support here. That is it. Automatically you'll see another line on my charts. Now because price cannot come back until the price come back into this is relevant. Otherwise you will delete this from your charts. So this is your now channels. Resistance, support, makes sense. Then again what happened? So you need to keep on modifying your support and resistance. Price breaks this again, guys. It often happens. It often happens. Now see this. Simple. You mark the low level. Support again. Support again, guys. Remember, you need to mark the support again. Price has to break this to go further to the downside. Let's say you're in a sell trade here. If the price has to go to the downside, price has to go through this ladders. Let's put it this way, bridges. Break support, one support, another, then another, then another. If it doesn't breaks and goes to the upside, then guys, remember, this is your resistance and support. You need to be out of the market. I'll explain you later, but understand the concept. Do you guys understand the concept? Give me a minute, guys. My brother messages me actually. Give me a minute. Okay, do you understand this? Say to me yes, then I'm going to show you on the charts the application of it. Say to me, I want to see the 50 yeses. Good. So don't ask me how do I mark my support and resistance. It's simple, guys. I don't look for channels. You don't look for channels. Automatically it becomes like channels. Trend lines. Why do we call them trend lines? Because remember, up and down movement of the market is always trendy. So it's trend. Line with the trend. Make sense? Does it make sense? Good. Let's say, guys, think that price is okay. I'm going to give you an example on this area now. First, the price was here. Forget this area. Forget this area. This was my highest level. The price hasn't breached, and this was my lowest level, guys. The price hasn't breached. The price was moving support, resistance, price had breached this and came on this area. Find support. You can see this. Guys, this is what I will do next. Simple, I'll do this next. I won't do anything else. That is it. Now remember, this is a support and that is acting as a resistance. You understand, guys? I'm expecting the price to rise, reject from this area, which this is what we call retest all the time. Retest all the time. You understand what I'm saying? Retest all the time. The price rejected from here, went to the support, breaks it again, guys, breaks it again. You need to see the trade on these areas then. Or these areas, if the price did not reject and goes straight shoot up to the upside, it will enter into this channel again. And this resistance will become support. I'm not answering this. I'm on the lecture right now. So wait for the questioning at a later stage other than support and resistance, please. So this is your support again, guys. Now what I'm looking for tonight, if the price rejects here, guys, and this is the next target, resistance, and next target 1.160, and if it breaks this, then we are going to the downside, guys. You understand? Do you understand? Possibilities are this: price will go here, right? Test the support, goes to the resistance areas again. Possibility is this: price will go to the support, break it. If it breaks it, let's see what happens. Establish another support to the upside. Oh, if it breaks it, maybe continue to the downside. But do you understand? I'm discussing only how to mark support and resistance in a rising market, in an ascending market, or a descending market. I will discuss the rejection later. My question is not a rejection, not where to enter, what are the reversal patterns. We're not discussing this. We are discussing how to mark support and resistance on your chart. Stay where I am right now, guys. This is important. That is for another day. Focus on this. I'm going to show you entries and exit out of the market in a minute. I'll give you brief answers on those questions. It is 3 bridges right now, but the question is, if the price finds a support here again, I'm going to do the same exercise, guys. See this. The price rises. Again. Another resistance. The price breaks the resistance. Establish. This price breaks this resistance. Establish another. So I will keep on entering. Do you understand now? Remember, you need to capture the price, the high and the low of the price. Capture within support and resistance. Remember, price moves like a fish in the water. Any questions on this? Do you understand, guys? Any questions on this? Any questions on support and resistance? That is it. I'm not answering any other questions. Sherry, let me give you a call back in 15, half an hour. I'm in a webinar. Exactly. What you have to keep drawing it, because the problem is, if you don't know where the support and resistance is, how are you going to trade? This is the question. Then you guys suddenly say, oh, the price just shoot it up. It went down, but then it reacted again to the upside. What happened? Oh, I'm out of the trade. The reason is you didn't mark the support levels again. Do you base support and resistance off point of resistance? What do you mean by this, James? Guys, it has nothing to do with the time frames. It is the price action I'm suggesting. Being a scalper is something else. I'm going to give you a bit of insight into it in a minute after this. The point of reaction is the ones. Listen to me. This point of reaction and point of rejection. Remember, I said that is for the straight lines, which is in no trending market. You understand? Don't confuse it. The concept remains different. Don't confuse yourself. Exactly, the concepts are pretty much the same, but if I add on those concepts, you will confuse yourself. Give me a minute, guys. I think I've gone blank. Can you see me now, guys? Good. Can you see the screens now? Good. So are we clear, guys, on support and resistance? First is in no trending market, straight lines. Remember, point of reaction, point of rejection, as simple as. Then support and resistance in an uptrend or in the downtrend, automatically it will look like a channel or a tunnel. Why we call them a trend line? Because it's a trendy market. You're putting a line on the trending market, becomes a trend line. You need to capture the price. You need to modify your support and resistance with the price. You need to establish on your charts where the support and resistance are, how the price are establishing support and resistance. If you cannot establish, obviously you'll have losses. One of the pairs recently we all traded, US dollar Canada. Remember, guys, all of us are trading this pair. Yes, selling and buying, all of us. I'm going to show you the application of support and resistance. Can you see this? It fell and came back. A lot of people said keep selling it. It is going down. A lot of said go. It eventually going to break to the upside. But that's what I think. Maybe. Now listen what I'm going to show you guys. How stage by stage I had traded this, and I traded this exceptionally successfully. I had shown you my live trades on that, more than 100 pips. When I'm gonna start when the price was here and eventually built on this. Okay, guys, I'm gonna start on this. That is where the price was first. Price breaks, found support here, guys. Price, this is acting as a support now. The price went up, rejected around these areas. This is the line, rejected. I need to see the break of this. The price breaks the support again to the downside. You don't have to do your chart so messy like me, but understand the concept. If you understand the concept, you'll be successful. Now again, very simple. Price breaks it, went up, retest, failed. That was your trade going to the downside. Now this is where the price established the next support. You understand? Unless the price breaks this, guys, the price will always go to attempt to retest to the resistance. Where the resistance is, I'm going to show you the resistance. There was a resistance here. Remember, this was your previous support. Sorry, it breaks this. That level was established. Price came here. This is the break of it. Price came to this level. You marked another support here. The price rises, went up to the resistance, retest the resistance there, reject it again. Does it? Acknowledge it, guys. Has he? Sell it again, guys. Boom, sell it. If it doesn't break this, it is going to the downside. This would be your level of attraction. If it breaks this, yes, we're going to the downside. I do not think, I don't care what I think. I would follow the price action instead. That's what I've been saying to you guys all along. We don't have to think about it, right? There are other tools you can use, obviously. Reversal patterns, head and shoulders, candlestick patterns to establish what's going on within it. But I'm not discussing that. I don't have time for that right now. We're already completing our first hour. But do you understand the concept? Market is moving in stages within support and resistance. It's pretty easy to catch the fish. Good. Sorry, guys, I think. Okay, but I'm going to show you. Okay, now I'm going to discuss another concept of the price action. Then I will mark Euro US dollar with entries and exits, and then we'll take a couple of questions before we end this webinar. Do you understand what I said so far within this webinar, guys? Acknowledge it. It depends what time frame I'm trading on. I need to see what the time frame I'm trading. I'm going to show you how I give you an easy example to trade on just one time frame, guys. A very easy example. I'm going to give it to you in a minute. Trading just one time frame. Leave the top and bottom analysis. That is for the advanced levels. Unless you're not mastering and making money, you don't go to the advanced levels, guys. Understand the basics first. Get the basics right. Start building, making the money out of it, and then establish on it. Remember, confidence. You have to build your confidence. If you do not have the confidence on the lower level, there is no point in studying the advanced levels. It's all about confidence. Now I'm going to show you guys a concept. I've discussed this in my webinar first. I'm sure all of you guys knew about it already. Price behavior when it comes to the retest, when it comes to the reversal and continuation. Reversal and continuation is the next topic, guys. Price behavior, reversal and continuation. We're looking for reversals and we are looking for continuation. Reversal is one when the price reverse. Price starts from support, go to the resistance, reverse from there back to the support, reverse from there back to the resistance. So that is one concept. And the second is continuation, price rise from support, go to the resistance, it continued from the resistance, change resistance into a support and establish another resistance. The continuation, you need to know how the price does it. There is just one way how the price does it. You heard about breakouts. He's a breakout trader. Bullshit. That's bullshit, literally. There's no breakout traders. All about price action. I've got a breakout strategy. I just trade the breakout strategy. Come on. You will be trading breakouts if the price breaks a certain level. Otherwise, there is no breakout strategy. Either the price will break that level, it will be a breakout trade, obviously continuative trade, or it reverses from the certain level, which is a reversal trade. So there is no third way of trading. Leave MS period. I'll discuss this later, guys. I don't have time for this, promise. We'll discuss about this later. It doesn't matter. These moving averages, it is not significantly important. What important is the price action. I'll explain you guys how to utilize it as it influence in your trading. Later, guys. Focus on what I'm teaching you. I don't have time. I have to finish this first. So what I said. This is the price behavior, support and resistance. Price normally travels within support and resistance levels. I have told you already, like a fish within a water. It has to find either one of them to live, to survive, and that's how it is. Rising from support, going to resistance, and falling from converting from resistance back to the support, and then from support again to the resistance level. Liz, are you in the webinar? Sumit, are you there in the webinar? I think Sumit's not there. Anyways. Okay, good. Now this is a reversal. So the promise is Sumit. Anyways, so this is reversal. Reversal is simple, guys. The price rises, it fails to break a certain level, and it reverses. Simple. Yeah, nuggets, I know. It is nothing. It is the basics, guys. Remember, when I take you to the advanced levels, what sort of what kind of trading traders you be. This is basics. I imagine you guys struggling. Anyways, now the rules of continuation. Understand this. This is a separate topic, James. You need to know the selling and buyers behavior, the pressures when the sellers enter the market, buyers enter the market. It's pretty simple, but that's a topic for another day. Yes, please. It is disturbing, actually. It rises, it breaks a certain level, the price breaks a certain level, we never enter. It breaks, could be a false breakout, could be a trap. Market makers movies, video you have seen, market makers, what it does, what it does. Commence a day with consolidation in Asian range that breaks that range with the false breakout, which we call stop hunt, and then by the London, before the London Open or near the London, it take a trend which is normally of 3 legs. That's what Ryan discussed, 4 legs at times, and end its day in consolidation. So remember, this might be a false breakout early morning. Let's consider 4-5 a.m. UK time before the London Open. A stop hunt, trapping the people. Everybody's going long on this because it's a trap. So you never enter. We never enter. We want to see this. It breaks, wait, retest. Retest means it tests the level. It breaks this resistance, turn into a support, and it tests the support, confirms it, establish a support. It has established here. Then you enter and the market goes to the upside, because what can happen is this: breaks it, comes down straight away. That is called false breakout. That's what happens normally every day, every week, every quarter, and every year. That's what the pattern is. Consolidation, a range, establish a range, false breakout either side, and then reversal and continuation, trend, 3 legs, 4 legs, and end the day with the consolidation. I'm sure you guys heard in the Daybreaker videos also. Except amazing videos, Ryan. Rico has loaded, I think. I purchased this course for £650 from a trader in UK. I remember those videos, and I understood nothing. You guys were lucky having those videos in the total course of the price. Believe me, that was bare knowledge. Okay, so the price can come to the inside again. If it comes inside, would you sell? No. You want to see the retest. Establish, retest, establish, confirms the resistance. It confirms, it confirmed. Now you will enter, go to the downside. Do you understand this, guys? I already explained this topic, break and a retest, many times. Understood? So that we can go to the practical application now. Say yes, all of you guys. Okay, guys, I'm going to show you an application now. No retest could be an entry, but it is against the rules and norms of the price action. You want to risk your money on gambling? By all means. Right? Good, Austin. Okay, I have only decided, because I do not have enough time, I'm going through Euro US dollar. I'm going to show you entries and exits using the same principle on an 1 hour time frame, guys. I'm not going to change the time frame, just to make my point more clear to you guys, that how effective the price action is regardless of the time frame. If you're following the right price action, if you understand the price action, nobody can beat you. Nobody can. Take out everything out of the charts. No divergence. We don't want anything. No daily high and low, guys. Nothing. Plain charts. Plain basic charts. I'm going to be a little quick on this, so you need to pick what I'm saying. All of you are trading for some time. You've gone through the videos before, so I'm not going to spend so much time on this. But let's say I'm going to start from here. Let's say I'm going to show you something. Remember, guys, on a 1 hour time frame, if I'm taking trades, the risk and reward are pretty good. It's always 1, 2, and 1, 3. Stop losses remains between normally 40 to 75 pips at maximum. I say 50, 55 pips, guys, nothing more. But then again, the profit levels are normally 80 pips, 80, 90, 120 pips. So that's what I experimented on my charts. I'm not going to change the charts here for you guys to understand the concept. You guys ask me again, in confusion is this, which time frame do I trade on? I often ask me this question. What a stupid question is this? No offense to you guys. This is lack of knowledge. Gone. So the price is rising. Let's capture the price. I am marking my support and resistance levels randomly. I'm not exactly marking them. I'm making my points here. That is it. So do not ask me a question why it's not exactly that pin bar or a wick. You understand the price is rising, guys? This is your entry, guys. It breaks. You understand? This is your entry, guys. So if this is my entry here on a retest, this is my stop loss. That's my stop loss, guys. That is it. Let's see. The price went to the downside, guys. 70 pips. My stop loss be like 25, 30 pips here, 15, 20 pips. That is it. Now the question is, the price rises from here. Very simple, guys. The price breaks it. It has to find another. It rises. You do not trade like this. I'm setting an example for you guys to understand. That is it. To understand. But you do not trade like this. This could be really difficult for you guys to trade like this. This is called literally scalping. But then again, I'm showing you the examples of the application of support and resistance, how effective it is. I will move my stop loss just beneath. But remember, this resistance is support. Resistance is acting as support now, right? If the price rejects and falls within it again, it becomes resistance. Price went up 53 pips, 15, 20 pips stop loss here, guys. Do not trade like this. I'm giving you a concept. Price went up, simple. That is it. That's all you need. Breaks, you exit the trade here. Break of this, you exit the trade. Exit the trade. That is it. Exit the trade. The price went up, retested, make failure. The price failed. You see the first candle here. This is bullish engulfing. That is bullish engulfing candle, guys. Another entry here. Stop loss just above. Because remember, this is your highest level marked. Highest level is marked now. I've just marked the highest level. That is it. If the price breaks this, I'm now out of the trade. The trend has changed. That is why I need to get out of the trade here. Do you understand what I'm suggesting? Do you guys understand what I'm saying? Simple. Hold the trade, guys. Hold the trade. So many entries. If I'm scalping, so many entries, guys. This was an entry. This was an entry on the shorter time frame. I see an entry here. And establish this. That is it. Rejected to the downside. Boom, you made the profit already. That is your entry buy, maybe. You want to buy this. But remember, you want the breakout. You can buy the market here. Market went up. Market break this. And let's establish another level. Market break this. First of all, this. Simple as rejections on these levels. I'm not marking horizontal straight lines. I'm just showing you the application of it. Pretty simple. Entries and exits. If I'm entering a trade here, this is my stop loss. 15, 20 pips, 7, 8 pips. Gone. How much was this trade? A quick one. 40 pips at least. I'm not suggesting you'll take eventually all of these trades, but then setting up an example here. That is it. The price breaks this. That is your stop loss just above. Highest point as a reference. What happened, guys? 30, 35 pips at least, 36 pips, gone. Price breaks it. That is, obviously your trade will be on the next candle, but this is a 1 hour time frame. Just follow this. Even if you're following this, not changing, going into a smaller time frames, you'll have an entries. Wait for the first candle, breakout, the next candle, confirms, entry, boom, to the upside, 42 pips again. What would be your stop loss? 20 pips. See this. See this, it's easy to exit now. Classic example, I took a trade on this. The price breaks this. I would not close my trade. Retest. This is a retest. That is an exit of my trade. You understand now? Exit. So if I took a trade here, I'm out of the market. How many pips? 6, 7 pips loss only. You understand now? Obviously, I'll be looking at the bigger picture. I'm not looking at the bigger picture right now. I'm just giving you examples there of support, how to utilize support and resistance. Obviously, you look at other things, zoom out and see what's going on within the market. But do you understand? This was my entry. By the rules, it breaks it, highest point, it breaks it. Obviously, this becomes support. Retest. These are 3, 4 candles retest here, 1 hour, right? Out of the market. Out of the market. What I will be doing straight away, for instance, buying here. What happened if I buy this? What happened? Shoot up to upside, 62, 67 pips, gone. Yeah. Then see. Highest and the low point, that is it. This was your trade, guys. But remember, that is within the channel, support and resistance. That is the break. If that is the break, where is your stop loss? Understand. Try to understand. Boom to the downside. How many pips? 72 pips. What was your stop loss? 9, 10 pips. It never comes in. It never comes in. You understand? Where it comes in, this was the trade where our stop loss was trigger. But remember, this was an entry. Stop loss was triggered straight away here. How many pips? 5, 6, 7, 8, 9 pips losses. How many trades we have already taken so far? 6, 7 trades already. We should be above 200 pips in profit. At a first stop loss gone, 16, 17 pips. Make sense? Do you understand? Do you guys understand? Then see again. Application of it, I'm going to show you. I marked the high and the low point. That is it. No, I don't wait for the retest. I'm giving you examples. I trade straight away when I see a change of behavior within the market. I don't wait for the retest. This is not what I'm suggesting you guys. I might take a trade on these levels, guys. Leave this. I took a trade. That is my stop loss. Oh, that is my stop loss. What happened next? 67. 73 pips gone. You understand? What was the stop loss? 20 pips, not even 20 pips. Then again, capture the price. High and the low, that is it. That's what I did only. High and the low, that is it. Let's say the price was here. I marked this. This must be a news manipulation. Must be a news. That must be a news. If there is a news, you know how to trade. But let's say I traded on the break of it. Break of it to the downside. Price comes up. Establish this. Clear entry, guys, to the downside. You understand what I'm saying? Do you guys understand? Are you getting what I'm suggesting? Now see this. Buy on this. Let's say I bought on this, for instance. That is my support levels. Very simple. Mark the high and the low. Let's say something like this. It is not a trendy market, but let's say it is a sort of uptrend. Price is making higher highs here. That is my buy. Price went up. I might sell here. Come down. I'm holding my buy trade. I cannot see the break yet. It was a news manipulation, for instance. You know how to trade the news. Take the news out of the equation. But let's say the price breaks to the upside. That was my entry. Stop loss just below, guys. Because if the price fails at this resist support level, it becomes resistance, and price would find this level as a next target, as a support. Remember, the price moves within support and resistance levels as a fish travels within water. To the upside. Gone to the upside first. See? Then I'm going to show you guys. A classic example you need to understand, and you will learn a failure of the trade. I'm going to show you the failure. If I took a trade, it will fail. I'm going to take a stop loss. Now you're going to see this, and this give you the confidence that it is going to be a small loss. Remember, when you're wrong, small loss, you're out of the market straight away. This, I show you the successful trades already. I show you the one loser. This is another. I will not take all of these trades. Obviously, I'll see the bigger picture first, but I'm trying to give you the concept. That's what matters. Let's say I took a trade on the break of this, for instance. The question is, the market has failed to go to the downside, reacted and went to the upside. I will already be out of the trade, but market price is here. I will mark the low. That is it. And guys, I will be out of the market around these levels. Price breaks to the upside. Then again, can you see this? I'm capturing the price. The price already breaks to the upside on this. Let's say this, gone to the upside. So you exit the trade. You enter a trade on this breakout, but then it fails to go to the downside, right? You exit already. How many pips? 16, 17 pips, 15 pips, not even 15 pips in reality, because remember, you took a trade around here in these levels. Remember, candle by candle, follow the candle by candle analysis. It's so easy to get out of the trade. Do not change your time frame. Stay on 1 hour. I'm quoting you an example here. I don't trade like this. I'm giving you an example. Does it make sense? The question is, get out of the trade quickly. You are exiting the market with the small losses, because the setups fail, the price action changes. It will change, yes, 4 times out of 10. But remember, the 6 winning trade will give you number of pips as compared to the losing trade will be like 6 times, 7 times bigger, larger, more. Any questions so far? Do you guys understand? 1 hour, 16 minutes. I don't want to go more into this, but let's say it does matter normally, but I'm teaching you a concept. I'm teaching you one topic out of everything. No, I don't use buy stop. Why would I use a buy stop? Remember, the price breaks a certain level, my stops trigger, it falls back as a false breakout. I'm done. My stop loss gone. You understand? How do I consider a stop loss retest? How would I trade a retest then? The price breaks and falls back into the market again. I'm done. I would not use a buy limit or sell limit. I mean, let's see this easy example, guys. I'm showing you the application. Retest gone to the downside. Let's mark the highest level. Very simple. Again, guys, to understand. If you are in this trade, you might want to exit around these levels. It might be the possibility the price shoot to the upside. But if you mark correctly, it won't even shoot to the upside, guys. Market breaks this level, There was no retest, falls in the next candle to the downside. I'm going to take you to the latest charts on Euro US dollar, and I'm going to show you the trades that I've taken. Guys, previously I've called in a buy trade, right? See naked charts here. See naked charts, guys. Candle, this was a hammer telling me bullish engulfing candle then. Engulf the previous. The break, a retest. Obviously, if you go into 4-hour time frame, this is a support level. But I'm not suggesting any 4-hour time frame. I'm saying 1 hour. Just follow it. What happened, guys? 106 pips. Let's say you ask me a question. The price rises. What you will be doing on these levels? Consolidation. The price may reverse to the downside. Yes, absolutely right. This will be my point of reference. Low. I will mark like this. When the price was here, automatically this creates and established chart patterns. You don't even have to know them. This is one of the chart patterns, right? Open up your chart pattern, you'll see this. This triangle is a chart pattern. What do you need? The price breaks, retest. I will not exit my trade, but I'm suggesting, let's say for instance, what are the things you need to continue remain in the trade? Let's say for instance, hold your buy trade, guys, gone up another. Then what we will be doing this, let's say the consolidation starts. This way is better. Makes sense. High and the low, that is it. High and the low. Capturing the price within support and resistance. Vessel here. Guys, that is your retest. 32 pips. Stop loss will be 10 pips. That's why I think Quinn's so successful. AP, I'm sure you work hard. When the price was here, let's say when the price was here, what I'm gonna do? So simple, guys. This is a pattern on your time frames, guys. Have you learned this? You saw that PDF files. It gives you the patterns, different chart patterns, triangles, rectangles. Exactly. You don't have to know them if you know exactly what you're doing. You're reading the price action. I'm telling you the core of price action here. Those have been documented for us slots to understand the market easily. You don't have to know even the names of them. Yes, theoretically, I say you need to learn them. Don't take my word on this. That was your trade, guys. Buy trade to the upside. When did I sell today? A question. I didn't sell here, but yes, I would sell here. If this was your sell today for no reason, that was your stop loss. Stop loss is 13 pips. See what happened, guys. Boom to the downside, 56, 57 pips. Now what I did. To be honest, I already have a sell right now. This is 38.2 Fibonacci retracement rejection. So if the price remains below this, right, that's my stop loss. I will looking to the downside. If it confirms to the upside, I might want to sell, I might want to buy. But remember, you just don't buy like this. There are other factors. For instance, see this. That is the resistance, acting resistance right now. Remember, the price is breaking. I show you the concept already. Let me give you example of the concept that I taught you earlier. Breaks it. That's what I did all day. Now, what do I do? Does it make sense, guys? Mark the high. Does it make sense? I'm not going to buy this until it breaks to these levels. Obviously, you got resistance. The price may react from this resistance back to the downside. Do you understand this? Excellent. A lot of people's trading this pair. I'm not going to go discuss and trade and analyze the pairs you want me to analyze. I will do what I think is best for you to understand the concept. So simple. I marking the high and the low. Automatically, it's descending channel. Automatically, remember, because price is falling. All I need is you often see on my charts, I need a break. I'll go long. Obviously, other factors matters. I'm not suggesting I'll go long based on this only, but this would be my first point of analysis. That's matter. And a break of this to the downside, I'm expecting. That is in a long run, I'm suggesting, guys. It's a daily time frame. Concept remains the same. But then again, let's see. Do we have something? Yes, we do have something here. Do you see, guys? Make sense? So obviously, if I'm selling here, my stop loss will be around these areas. That is it. If I'm selling around these areas, stop loss just above. Remember, because it breaks and this is above the resistance. If it comes back into it, it becomes support again. 1 hour time frame. I think I did analysis today on 1 hour time frame. Let me show you guys. Yes, I did this today, guys. That was before I was selling. That was my trade today. Sell trade. That's what I was suggesting. Look to the downside. 100 pips. Gold. No reason for me to buy. How much was my stop loss, guys, when I'm trading this? 20 pips. Profit levels, TP levels, 100. Ratio, how much is it? Somebody called ratio here. 20 pips stop loss, 100 pips profit. Yeah, that's better. Seems like you guys are with me. Look at this. I called this trade, guys. This is my entry. That is my stop loss. How many pips? 288 pips. 25 pips stop loss. Can you believe it? Can you believe it? Can you believe it? Can you believe it? Tell me, guys. Does it not make you laugh what I'm showing you? I'm not changing the time frames there. I'm not using any other concepts at the moment. Blank charts, no Fibonacci's. Fibonacci is the same thing. I'm going to show you in a minute. Tell you exactly in a minute what Fibonacci is, but no divergence adding. I'm not adding divergence. No volumes here. So support and resistance, and using support and resistance. I like what you said. First of all, this is where the price is. It could be a retest. You need to understand, significantly important. Try to establish if there is a support. Maybe this is a better level, I say, because it connects the two. It might go here. That's what I think. To the downside, I'm certain, pretty certain that's going to happen. Obviously, we need another break to the downside. Makes sense? Eddie, Aaron, Alexander, Tiffany, Manish, Brooks, Austin, good. At least it's great to know you guys picking what I'm telling you guys. That is it. The concepts ends. Support and resistance. Are you clear on this, guys? Every line on your charts has a meaning. Every line on your charts has a meaning. This is not gambling. This is an industry. Market moves are established by human behavior. That's how it works in banks nowadays. It's the computers and ES that runs. But remember, those been programmed by human beings. So at the end of the day, it's human mind which is moving the market. Understood? Now, what I'm going to show you guys is this. Something. A lot of people are asking me, do I just trade with this? I'm done with the trading, with my webinar. A bit of discussion on other matters, and then I'll take your questions. But I'm going to show you guys. A lot of people have been asking me this. How do I trade? I trade with this, guys. Support, resistance, supply, demand. I'll give you a lecture what supply demand is, what is the difference between supply and demand and support and resistance, how to utilize within your trading. It is the same concept, the approach is different. That's the only difference between my webinars. That is it. You guys already knew all of this. Application is different. Supply demand. I use fibs, pivots, retail, support and resistance. Divergence, I use volume, I use harmonic patterns, chart patterns, sometimes basic Elliott wave if I'm trading long term, but that's normally never happens. There was an Elliott wave pattern today on EJ. We discussed EJ, I think is ABCD correction waves. Let's see what happens. So guys, I'm using just these patterns, and that is how I trade. Let me tell you something. What is Fibonacci's? What is pivots? What is support and resistance? Fibonacci, pivots, support and resistance, supply and demand are just support and resistance. These are support and resistance levels. There is no difference. They are just levels. Now Fibonacci's are support and resistance tool which is used by the institutions. Banks use them. That is why normally 61.8 Fibonacci, normally there was a profit taking because banks likes to book majority of their profit, 60%, 70% they booked. That's why you always see a reversal from 61.8 Fibonacci, because you know that tool is used by institutions and the banks. It is nothing more or less than a level of support and resistance, a different support and resistance tool to establish. Retail support and resistance is what we had marked on our charts ourselves. Make sense? It is an accumulation of retail minds marking them on their charts, ultimately looking at the same levels. So that's what's happened, because I'm marking like this, you are marking like this, Quinn is marking like this, Ryan marking, A, B, C, Z is marking. Eventually there is a uniformity on the chart and markets start reacting from those levels. Make sense what I said? Remember, retailers move the market to a certain extent, 15% I think. But bankers, institutions use Fibonacci's. The scalpers in hedge funds and banks, there's a day trading. They're scalpers trading. They use pivots to scalp. They use support and resistance. Everybody use support and resistance. Remember, the point is which tool do they use? They use pivots for scalping. Higher time frame, they use multiple Fibonacci levels. They take out support and resistance level by utilizing the tool multiple Fibonacci's confluences they use. At the end of the day, it's all support and resistance levels, guys. Don't confuse yourself. What's Fibonacci? Extraordinary Fibonacci. Let me give you an example. This is what happens. This is Fibonacci retracement. Now, what is this retracement suggesting? This is what it's suggesting. Now, these are support and resistance levels. If it is above, this is resistance. If it is below the price, support. This is price breaks this. This is resistance. This is support. Breaks this. This is the resistance. This is support. Nothing else. There's no difference. Do you understand? Do you understand what I'm saying? They are acting as support and resistance levels. That is it. But this is a tool used by the banks and institutions. So normally they tend to take profit around these levels. Harmonic patterns get activated, confirmed around 78.6 and 88.6 Fibonacci, and that is why you see a lot of time reversal from those levels. Make sense? So remember, it's all support and resistance, but your focus is more on support on these tools instead of price action. How do you expect yourself to be a profitable trader? Absolutely not. Do you understand the criticism? Divergence, 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 divergence. But come on, divergence is happening on your chart, but it could take another half an hour to be matured before it activates. So what you'll be doing, what happened within half an hour? Within that half an hour, market might go up to another 100 pips. Would you just take a trade on divergence? Then no, absolutely not. It's a killer. Head and shoulder pattern, for instance. There is a head and shoulder pattern. So what is the bias? In break at the neckline, sell it. Head and shoulder, possibility bearish, right? But remember, it might take another 400 pip movement within the market before it activates. So would you just take an entry based on head and shoulder pattern? The answer is no. Harmonic patterns, for instance, bearish shock. There is a bearish shock on Euro US dollar, and I think there is a bat, I think. But remember, the Euro US dollar rises the other day, 16,780 pips. Would you want to stay in a trade based on the bearish bat only, a harmonic pattern, and be negative in 67 pips? Would you do it? Say yes or no. Say it. Absolutely. You want to be precise with your entries, guys. You're investing your money on it. Unless you're trading with pence, cents. Does it make sense? You don't confuse yourself. The prime analysis is the price action, but then again there is another factor. The second prime analysis is to see the buying and selling pressure within the market. That's a discussion for another day. I'm tired. But does it make sense? Any questions? Do you understand why you guys failing in trading? Do you guys understand what is the failure in your trading? A lot of emphasis and focus on things which are secondary, not primary. Fibonacci. What is Fibonacci? Fibonacci is just support and resistance levels, nothing more, nothing less. But yes, they are support and resistance levels used by the institutions. Obviously, you will see larger moves, sharp moves taking place, reversal and continuation taking place from Fibonacci levels. The reason is because institutions comes in on those levels and reacts. If Fibonacci is used by the institutions, they mark Fibonacci 38.2. Obviously, often you see a quick reaction from 38.2 because they like to sell and buy from those levels. Institutions and when institution enter the market at a stage, it is immense and instant reversal. You'll have the video. You shouldn't be having any problems. The Fib training is exactly what you need to be a profitable trader. Remember, guys, your approach is wrong. That is the difference. That's why you need to take mentorship. And one thing more, I would strongly suggest, guys, instead of trying yourself, experimenting yourself to be a trader, burning your profit, the live money, as a friend, I'm suggesting this. Invest in yourself. $1,000 maybe. How much is $1,000? Or Rico is giving a course for like $500. Invest in yourself, because it is not the knowledge you need. The confidence behind is the problem, and you would never have it unless a mentor is giving it to you, or you'll earn it after 2 years of losses. Choice is yours. Do not look at the smaller picture. You cannot become a trader by just experimenting yourself. You will eventually become a trader. Yes, it will take you a couple of years, guys. You will lose that real money to become a trader. Then instead, just you to get that money, invest with a mentor. It'll put you on the right track. But the problem is, he'll give you the confidence. You might knew all these concepts, but the problem is, if you say to yourself, I'm applying those concepts, you won't have a confidence behind it. And that's why you'll change when you're trading. And when you're trading, you'll change, you'll have losses. Because I am telling you, you believe in me as a mentor or a trainer. You'll say what he's saying is right because he's a profitable person. It makes sense. It's human mind that matters. Invest in yourself. My strong advice is invest with your mentors. Take out the money out of your trading accounts and sell it. Give it to, and invest in the training mentoring courses. Guys, give me a minute. Give me a minute, guys. Do you guys understand today what I said? Using support and resistance to identify entries into the market and exits only. Basic. This is not just I trade with, but this is one of the concepts. They are of significant importance, prime importance it contains. Without this, you cannot be a profitable trader. Are we clear? Yes, I saw ADS. I saw relative strength index, RSI. I saw it. Stochastic, I use it sometimes. Bollinger Bands, I use it sometimes. I used to use Ichi clouds as well, but depends. But think those are secondary analysis. It doesn't mean I just want to use them to see confluences and that's it. You can't trade with them. Do not confuse yourself. If you're asking me these questions at this stage, right? Even now after listening what I just said, believe me, you need to change your understanding and open up to the price action more. Remember that scalpers and the traders just trade with support and resistance and price action, guys. You'll see them Fibonacci on their charts and price action, and that is it. They don't even look at other things. They give a shit about other things, to be honest. What did I show to you now? What was it? What was it? What did I show to you now? How many pips we just made? Price action, support and resistance. Did I use Fibonacci? Did I use divergence indicators? No. So, shouldn't be asking this question. Unwise question. Remember, try to understand what is the concept, what is the philosophy behind the word support and resistance. And price, remember, price like fish moves in market. The price has to move within support and resistance levels. It's simple as. I will take questions for the next 10 minutes. I think that is it. Then we'll conclude this webinar. Any questions, guys? I want you to give your feedback in the group. I'm gonna request set a post saying feedback on the webinar, and I need this webinar feedback in the group, guys. No worries. Thank you. That's fine. I trade normally myself any pair. I'm not scared of any pair. The reason is because I knew the price action, essence of price action. But then again, normally I trade Euro, US dollar, GBP. I'm not trading because of the referendum. I am trading nowadays to a certain extent, but then again, as soon as the Article 50 is triggered by the government, GBP would eventually go to the downside. A huge drop is expected. There's an so I would not suggest. I'm not trading at least gold. I've started recently. I really like gold and spot gold, and I trade New Zealand US dollar, US CAD, US dollar yen, EJ. I've been trading EJ. I've made a lot of money with EJ, guys. That is the only pair I started to trade with. There's a fundamental side of it. You need to know when you're trading a pair. If you want to trade EJ, you need to know how to analyze the fundamental aspects of US dollar yen and Euro US dollar and Nikkei, and also US dollar index. So I trade then EN, GN, AN, these pairs I've traded a lot, and these are the pairs I trade. Remember how many pairs I could trade by scalping or doing on the shorter time frame. I don't have like 6 hands to open up and close trade at the same time or analyze my old charts, right? End of the day, remember guys, trade with your daily targets, 20 pips a day. Once you achieve 20 pips a day, do whatever you like, as long as you can secure your 20 pips. Do whatever experiment you want to do it. Trailing, whatever, trailing stop, whatever. But remember, secure your daily target first, 20 pips at least. Secure it first, 20 pips, 40 pips, 100 pips a week, 400 a month. If you consistently can do this, you'll be a profitable trader. I hardly see few traders to date achieving that mark. Consistently is the word. I didn't see them. Now I just trade a couple of pairs. I just keep opening them and closing them and see if where the price is, and that is it. Any other question? Okay guys, I think that is it. Hope you guys enjoy the webinar. Do you understand this webinar today? The concepts that I've given? Say yes, guys. Okay, sorry guys, I think I missed the questions. I didn't see the questions coming to my way. Support and resistance, not show us resistance in trend line and entry. Promise, I did show where to enter and exit within the webinar. I think you missed that section. There will be a recording of this uploaded, so you shouldn't have any problems, guys. No, I like trading on Sunday. Again, I'm not scared of Sundays. Remember, I'm following the price action. I like the gaps. No, guys, I don't decide by looking at the moving averages to who's controlling the market. That's wrong. Yeah, there is a new once the support is broken, once the price breaks the support, then it becomes a resistance. Yes, Chris. So did you come across trading? Oh, there was a guy. I used to do. I was studying at law, but then again, I had a little bit of business. So there was a guy in Dubai. He rang me. He's my old friend. I came from Dubai. He said he's been doing trading forex and he's been in a lot of profits. And I said, "Can you show me what it is?" And he referred me to FX Street, and that's how it commenced. That's how I began trading. Yes, I do. I do top bottom analysis. I start with monthly time frame, zoom in into low time frames. Chris, Stephanie, yes. All of guys understand. Good. Manish, definitely. Zan, do you understand today? I spoke to you earlier today on the phone, right? Do you understand today what I said? Question, how do you look? Yeah, I put on the trades, set my stop loss, and I sleep then. Yes, I am. I will be posting this on the Facebook. Yes. No problem. Thank you, Liz. That is fine. Work hard on this. Yes, it will be uploaded on Fib. Yes, I do look at the trend. Okay, no problem, guys. You have a very safe trading Asian session coming up. Looks like a couple of really good setups, especially your US dollar that I'm looking at. And do leave your feedback in the group. I'm going to post, and just you could reply to that post, right, guys? I hope you enjoyed it, and I'm sure it will help you immensely in your trading. It is 9:45, guys. 10:45, 15 to 11 in London. 15 to 11. Wish you all the best, guys, and take care of yourself.